Well, to talk us through this and the latest news from the banking sector as a whole, I'm very pleased to say we're joined by Bill Winters, former co-head of JPMorgan's investment bank. Bill, thank you so much for coming on the show today. Now, first of all, it's very clear when we listen to President Barack Obama that he says, well, Wall Street is just not getting it. Are they just missing the point?
Yeah. I think Wall Street gets it very well, and they're obviously trying to get that fine thread through the small eye of the needle, which is, on the one hand, recognizing the responsibility that the banking industry has, both for what's happened, but of course, much more importantly from here, how things work prospectively, and how do we make sure that behavior is such that we don't have a repeat of this terrible crisis that we're still withdrawing from. So on the one hand, I think there is a recognition by the banks. On the other, there's the competitive reality that a bank manager faces every day to generate profits for shareholders. At the same time as carrying out their missions as lenders and capital raisers, etc. So I think they get it, but I think it's a tremendously large challenge.
And it's a very difficult, of course, one to actually put together. But what do they have to do going forward? We were hearing from Barcap saying they're actually going to postpone some of the bonuses. I mean, what do they need to do? Give a message to the citizens that actually they're in this with them?
It feels to me like there are two things that are going on. One is getting the compensation structure on Wall Street or in the city right structurally. So making sure that there's a program and a system in place that incents people managing risk to do the right thing for the long term and not to allow short-term greed or other motivations to take over. And those are structural issues that are complicated, that banks have always strived to try to accomplish, but it clearly needs a fresh look after the past couple of years. Then there's the other issue that's very real right now, which is more political, it's more emotional, sentimental, but very real as well, particularly real for somebody that has to answer to the public, as would any politician or regulator. And when you look at things like the 50% tax in the UK, introduced by the current government, there's clearly a heavy dose of populism and focus on that emotional side. I think the challenge is for banks to be so clear and straightforward about the structural changes that they're making that they can win the argument in the long run that what they're doing is in the best interest of the market, in the best interest of the society and the citizens, and to try to avoid some of the blunt instruments that could end up actually doing more harm than good.
Now, Bill, Obama is actually meeting with a lot of the top bankers in the next hour. Well, the ones who can make it, who took their private jet because there's so much fog out there, what are they going to be answering the president?
Well, I assume that the president will want very strong assurances that the banks are focused on not just the issues relating to their banks, but the issues relating to the broader perception of the banking industry. I'm sure he's very focused on banks committing capital to help the American economy and obviously other governments, other economies around the world to pull out of this recession, focusing on, in particular, lending to consumers and small and medium-sized enterprises who are still really struggling in this financial crisis.